Corporations in the U.S. pay income tax on their U.S. earnings. The statutory tax rate is 35%.
The U.S. corporate tax rate is 35%, is one of the highest in the world now. You know, you look at countries in Europe, they are in the kind of high 20s and low 30s.
But most corporations pay far less than that 35% rate. Now, the effective tax rate is a measure of what they really pay. So for a typical corporation that has a lot of multinational activity, their effective tax rate might be in the low 20s or in the teens or even in the single digits.
Some of them are paying a negative tax rate on their U.S. earnings because of the things they're doing offshore. They're playing all kinds of games to reduce their U.S. income tax to ridiculously low levels.
The issue of companies shifting income ultimately to tax havens should really be at the top of the agenda right now.
Somewhere on the order of $70 billion a year are lost to the U.S. Treasury just from offshore tax shelters.
Offshore financial centers are typically small countries with few natural resources. They've created a business-friendly environment, business-friendly laws in order to attract foreign capital.
There's a belief that the offshore world is somehow the province of shady businessmen and rich folks who set up offshore bank accounts to cheat on their taxes, but largely people who we've never really heard of. And that belief is false. Basically, every major technology company and every major drug maker in the U.S. relies on the offshore world for a very significant portion of its profits.
The Cayman Islands, where you have just in one relatively small building thousands and thousands of post office boxes, in effect, just box numbers. It's called the Ugland House, where companies here claim to have an office, even though there's no economic activity that is going on there.
Multinationals will use a tax haven as a way station. That is not a place where they put money like people do. They pass money through there so it doesn't get taxed in the place that they earn the money.
The money only passes through in a sort of digital and political sense, but the money itself is onshore.
It's in a bank in the United States, but it's booked in these places.
They just use the international tax rules to shift profits out of the United States and other high tax countries into low tax countries. And that's called transfer pricing.
The whole game in transfer pricing is to allocate as much income as possible to a low tax country or a tax haven, and as much expenses as possible to a high tax country like the US. The problem is that you have companies that are allocating for tax purposes the bulk of their profits to parts of the world where in some cases they have no employees, they have no sales, they have no real economic activity of any kind.
Under U.S. tax laws, there's nothing illegal about what they're doing. But by any reasonable standard, when most of your business is in the United States and most of the intellectual know-how, research, and productivity is in the United States, the profits that are taxed should also be in the United States.
One of the most interesting examples of how transfer pricing moves profits around the world is with a company called Forest Laboratories, and they make a very successful antidepressant called Lexapro. This is a company that has virtually 100% of its employees in the US. It has almost 100% of its sales in the US. Its headquarters is in the US. But the bulk of its profits end up in Bermuda. The way Forest does this is, if you walk into a drugstore and you buy a bottle of Lexapro, you know, a chunk of that goes to the drugstore and a chunk of it goes to a drug distributor. But the majority of it ends up with a Forest unit in Ireland, which actually manufactures the drugs and sells them to its US parent company. The reason why they have their manufacturing located in Ireland is because Ireland has a low tax rate. But Forest does not simply let the profits stay in Ireland. Forest pays royalties for the use of the patent of the drug to another Irish company that claims for tax purposes that it's managed in Bermuda. The office that they list as their center of management in Bermuda, it's a law office. There are no Forest employees there, but US tax law and Irish tax law lets Forest allocate the majority of its overseas profits to, ultimately, a law office in Bermuda.
Every major pharmaceutical company is engaged in this practice. Pfizer has become so adept at their profit shifting that now they report 100% of their profits in offshore locations, and they have no profits being reported in the United States. In fact, they have losses in the United States. For the U.S. Treasury, the implications are a tremendous loss of tax revenue. But on the flip side, for the companies, the benefits are enormous. The effective tax rate is reduced, their reported profits on Wall Street are increased, and the stock price stays strong.